afternoon, and thank you for joining us for this informational webinar of the Commuter Benefits Program. My name is Tom Flanagan, and I'm a Public Information Officer with the Bay Area Air Quality Management District, and I'll be guiding today's presentation. Today we present our second webinar on the Bay Area Commuter Benefits Program. This webinar will focus on answering some of the main questions we've received from Bay Area businesses about how the program works and how to comply. For today's webinar, I'm joined by four presenters, Dave Birch and Jackie Winkle from the Bay Area Air Quality Management District, Christine Naley-Grubel from the Metropolitan Transportation Commission, and Linda Furness from 511 Regional Rideshare Program. During today's webinar, there will be opportunities for viewers to ask questions to our presenters via the GoToMeeting box on your screen. We will do our best to answer as many of the questions as we can in the time allotted. Submit your questions as you see us prompt throughout the presentation. All questions will be answered at the end of the presentation. Let's go ahead and get started with today's webinar. We'll start with Dave.
Thank you, Tom. So the Bay Area Commuter Benefits Program is now in effect. It was adopted by the Air District Board of Directors and the Metropolitan Transportation Commission back in March, pursuant to Senate Bill 1339, which was a legislation enacted by the legislature back in year 2012. This whole program is modeled on local ordinances that were adopted in several Bay Area cities in recent years, including the city of Berkeley, the city of Richmond, the city of San Francisco, as well as San Francisco International Airport. Employers must comply by offering one of four commuter benefit options that we'll be describing. And the key deadline that's coming up shortly is that employers need to select their commuter benefit option and register with us and make that option available to their employees by the end of September. This is a pilot program that we will be implementing from now through the end of year 2016, and we'll be monitoring the results of the program and providing a report to the legislature in that time frame, and the legislature will then use that information to determine where we'll go after year 2016. So let's talk a little bit about who needs to comply with the program. So the program applies to employers that have 50 or more full-time employees in the Bay Area. That includes private businesses, nonprofit organizations, as well as public agencies. The employee count is based on all Bay Area work sites combined. So that's an important point for multi-site employers, that even if you don't have a single work site that has 50 or more employees, if you have multiple work sites with fewer employees, and collectively those work sites have at least 50 employees in the Bay Area, then the program would apply to your situation. The program applies to all work sites that are within the boundaries of the Air District. That includes the 9-county Bay Area, from Santa Clara in the south up to Sonoma, Napa, Solano in the north, and there is a map of the Air District boundaries on the program website. Let's talk about who qualifies as an employee for purposes of the program. So we define an employee as anyone who receives a W-2 form for tax purposes. As I mentioned, the program applies to employers that have 50 or more full-time employees in the Bay Area. For purposes of this program, when we say full-time employee, we're talking about an employee who works at least 30 hours or more per week. So the full-time definition is what's used to determine whether an employer has 50 or more full-time employees and is therefore subject to the program. There's another key term, however, which is the term covered employees. And so if your work site is subject to the program because you have 50 or more full-time employees in the Bay Area, then you need to offer the commuter benefit that you select to all covered employees who work at least 20 or more hours per week. There are a couple of key exemptions to the employee definition. The first is that seasonal or temporary employees who work 120 days per calendar year or less are exempt from the employee definition. Secondly, field employees who do not report to a permanent work site and do not report to an office to pick up an employer-provided vehicle are also treated as exempt. So what that means is that seasonal or temporary, as well as field employees, can be excluded from the employee count when you're making the determination about whether the program applies to your company. You can exclude those employees, and some companies may then fall under that threshold as a result of these exemptions. The program requirements are pretty straightforward, and those requirements that, as I mentioned, apply by September 30th are to select and provide one of the 4 commuter benefit options, to designate a commuter benefit coordinator, and that person is basically just the person who will report and register the worksite for purposes of the program. We'll be covering a little bit more about how to go about registering in just a moment. It's also important that once you've selected your commuter benefit, that you notify employees about the benefit and explain to them how they can apply to take advantage of the benefit if they are interested in doing so. The benefit should be made available by October 1st. And so those are really the key requirements that apply in the near term. We will also be compiling information for program evaluation from your registrations. But one point we want to emphasize here is that there are no performance standards in this regulation, this program. So if you select a commuter benefit and make that available to your employees, then you will be in compliance with the requirements, regardless of how many or how few of your employees choose to take advantage of the commuter benefit that you're providing. So there are 4 commuter benefit options. Option 1 is to allow employees to exclude their transit or van pool costs from taxable income by allowing them to use pre-tax dollars to deduct those costs from their paycheck on the front end in order to avoid the personal income taxes and payroll taxes that would otherwise apply. And that the amount that can currently be set aside for pre-tax purposes is limited to $130 per month. We'll come back and talk more about option 1 in a moment. Option 2 is similar to option 1, the key difference being that the employer would get involved by providing a subsidy to help offset or defray the employee's costs for transit or van pooling. Option 3 would be if an employer chooses to provide transportation by organizing bus service or shuttles from a nearby transit site station to their work site, or van pool service to their work site. But that's where the employer is getting more directly involved in providing the transportation. And then finally, there's a 4th option that we call the alternative commuter benefit, which is designed to provide even greater flexibility by allowing an employer to select a different type of benefit, and we'll be talking about that more as well. So that's a brief overview of the program and the key requirements, and now I'm going to turn it over to my colleague Christine from MTC, who will tell you a little bit about the registration process and the employer assistance resources that are available to you.
Thank you, Dave. A key role of MTC in collaboration with the Air District is to provide use of 511.org and 511 phone to provide employer outreach and assistance, including providing an online registration process. Company headquarters received a notice to register from the Air District about the program. Included with the notice was an employer ID, which is used to enter the registration process. Employers, through their headquarters, are asked to designate a staff person to register all San Francisco Bay Area work sites that are required to register. For those employers who are registering, we've endeavored to make this process as easy as possible. please plan to report the following on your registration form: your Bay Area worksite locations, your employee counts for both time employees and covered employees, the commuter benefit option you're selecting for your employees, and how your employees will be notified about the commuter benefit option. Once you've confirmed the commuter benefit option that will be provided to employees, this process should take a minimal amount of time for you to complete. If you need assistance in obtaining the employer ID, please contact the helpline specialist as noted on the slide. You also can call 511 and say commuter benefits. Employer outreach materials, the website landing page provides employers with employer assistance materials as well as the registration button, which is used by employers to register for the program. Employers reach this website page by going to 511.org and clicking on Bay Area Commuter Benefits Program. There are a number of green tabs you'll see in the center of the website page on the right-hand side that include a variety of employer outreach materials that I will describe next, along with other materials to assist employers. Employer outreach materials are available on the website landing page to assist employers with program information as they choose the commuter benefit option that will work best for them. Included is an employer guide to provide detailed program information. In addition, there is an option 4 guide, also providing a detailed description of the various measures an employer may select from when choosing option 4. And I'll be talking with you about option 4 a little bit later in this presentation. There's also a frequently asked questions document, which is based on feedback we've received from employers relating to the most asked questions and answers provided for employers' benefit. We also have a list of benefit providers, so if an employer chooses to use a third-party vendor, we have information on various vendors for an employer to contact. There is a video with a program overview for employers. It includes employers who have already registered for the program, as well as a how to register section. And finally, we have some profiles of employer programs. Employers provide information on their current commuter benefit programs that they're offering to their employees for you to review. In addition, employers have free assistance available from the 511 Regional Rideshare Program and its partner counties. Linda Furness, an employer services representative from the Regional Rideshare Program, will be here to answer questions that employers may have, as you will be given an opportunity throughout this presentation to provide us with questions, as mentioned earlier. Employers can go to the website landing page and click on Needs Assistance, then click on the county where you are located. There you will find contact information for an employer outreach staff assistant if you have any questions or need assistance as you select the option you will provide to your employees. Examples of assistance may include help in evaluating the commuter benefit option, some customizable online surveys to determine what commuter benefit would work best for your employees. There is also density mapping available to determine, based on where your employees live versus where they work, what commuter benefit option may work best for you and for your employees. There is help with vanpool and carpool formations at your work sites, and also information is available on telework and compressed work week for your employees. So I am now going to turn this back over to Dave to continue the presentation.
So during the July webinar, we received a lot of questions, and we wanted to just highlight a few of the questions that were asked quite frequently then. The first question was, are part-time employees covered under the program? And as I mentioned earlier, if the employer is subject to the program by virtue of having more than 50 full-time employees, then the employer is required to provide the commuter benefit to all employees who work 20 or more hours per week. So those part-time employees who are working at least half-time would need to be covered under your benefit. Another common question was whether there are fines or penalties that would apply in the case of an employer that did not comply with the program. The answer to that is yes. Our emphasis is very much on achieving voluntary compliance by working with employers to explain the merits of this program and making resources available to help you comply. However, the program is mandatory. If you're subject to the program, you do need to participate, and the Air District does have authority to impose penalties pursuant to California Health and Safety Code if that becomes absolutely necessary. Another question we heard a lot is whether employers can offer multiple options or select different options at different worksite locations, and whether an employer could switch options after they've made their initial selection. The answer to all those questions is yes. We're trying to provide maximum flexibility for employers here. So we've designed the registration form so that an employer that has multiple work sites can select a different commuter benefit option at each of its work sites if it wants to do so. And the employer can also switch its option at any point in time. And we would only ask that when you provide us with your annual update information, that at that time you would inform us if you've chosen to change the option that you're offering to your employees. So that, again, is overall questions that we heard. What we're going to do now is move to a little bit more in-depth discussion of the various options. But we would ask you to please go ahead and submit any questions that you may have so far about the material that we've covered on the slides to date. So let's talk a little bit more in depth then about option one. As I mentioned earlier, that's the pre-tax payroll deduction, and that applies in the case of employees who commute by means of transit or van pool. This is an existing benefit available in the federal tax code. But the key point is that the employee can only take advantage of that if their employer facilitates that by administering it for the employee. The beauty of this option is that it provides tax savings for both the employer and the employee. When it comes to administering option one, the employer can either choose to administer the benefit in-house if you do your payroll in-house, in which case that would mean you would need to work with your employees to find out how much they wanted to have you deduct from their salary to cover their transit or van pool costs, make the appropriate payroll deduction, purchase and distribute transit passes or vouchers for your employees directly. So that's one approach that the employers can choose for implementing option one. However, the employer and many employers prefer to use a vendor to help them administer their commuter benefit. In the case of option one, a vendor can help you by setting up your program, handling the deductions, providing reports to you on a monthly basis, and ensuring that your program is administered in a way that complies with IRS guidelines. There's a list of vendors that are available on the program website. Some of those vendors are full-service payroll administrators. There's also vendors on that list who specialize in providing commuter benefits only. Many vendors will charge a nominal fee for administering your commuter benefit, but there's some who will just provide that as part of their menu of services for you. We've also prepared a separate option one tutorial that's currently posted on the program website. We get into a little bit more detail there about option one, and so we would encourage you to go and take a look at option one if you think option one is going to be a good option for your situation. We've got a lot of questions about option one in our July webinar. We'll just go over a couple of those real quickly here. First one was, does an employer need to purchase transit passes and distribute them to the employees, or can it be administered on a cash reimbursement basis? In a nutshell, the answer to that is that cash reimbursement system is not allowed by the IRS in areas such as the Bay Area where there are transit passes or vouchers readily available. So you would need to either directly on your own or via the vendor administer option 1 by providing either transit passes or vouchers. Second question we heard a lot is what happens if an employee's monthly costs exceed the amount that the cap that the IRS allows for their transit or van pool pre-tax purposes, which is currently $130 per month. Since the maximum that can be set aside is $130 per month, if the employee's costs exceed that amount, then they would need to use regular dollars, post-tax dollars, to pay for the balance of their costs that would exceed $130 per month. Another question we heard with some frequency was whether employer has to allow the use of pre-tax dollars for both transit and van pools if you're selecting option 1. The answer to that is yes. The intention here is to provide the tax benefits that are available through the federal tax code. Those apply for both transit and van pooling. So we would want you to provide the pre-tax benefit for both of those modes, transit and van pooling. Let's talk a little bit now about option 2, the employer-provided subsidy. Option 2 has a lot of overlap with option 1. But the key difference is that we would, the employer, rather than just allowing the use of pre-tax dollars by the employee, where the employee is paying on their own, the employer would step in and provide a subsidy to help offset or defray the employee's monthly cost for transit or van pooling. Purposes of this program, the maximum subsidy that an employer would be required to provide is $75 per month. In most cases, that's probably the amount that would apply. However, if you have employees that have a lower monthly cost, let's say they live in an area where there's a transit pass available for $60 or their van pool fare is $50, then the subsidy amount would be limited to the amount of the employee's monthly cost. An employer can choose to provide a higher subsidy amount above $75 a month at the discretion of the employer, but that is not required. As in the case of option 1, the subsidy amount that would be tax-free, treated as tax-free by the IRS, is limited to $130 per month. So any subsidy amount that would be higher than $130, the increment above $130 would be treated as taxable for tax purposes. The subsidy, as in the case of option 1, would need to be administered in the form of a transit pass or a voucher, not on a cash reimbursement basis. Another point is that many employers that offer option 2 choose to combine that with option 1, so that if an employer, let's say, provides a $75 subsidy and the employee's monthly cost is $125 a month, the employee could use their own dollars, pre-tax dollars, to pay for that $50 balance. A couple of frequently asked questions that we heard during our previous webinar is, does option 2 include providing a subsidy for qualified parking? So there is a provision in the federal tax code that allows tax benefits for employer subsidized parking. However, for purposes of our program, we're trying to promote the use of alternative modes, not encourage people to drive to the work site. So qualified parking is not included under the Bay Area Commuter Benefit Program. Another interesting question is whether the employer can comply by means of option 2 by working with the VTA EcoPass program, or AC Transit's Easy Pass program, or the Caltrain Go Pass program, which provide passes to all your employees at a reduced price. Would that comply with option 2? The answer to that is yes, that would qualify for purposes of option 2. The only caveat there is that many work sites are served by multiple employers, and so we would encourage you, if you're going to use EcoPass or EasyPass, to consider coupling that with allowing employees who use other transit providers to pay for their transit passes by means of option 1, by using pre-tax dollars. And then finally, can an employer provide a subsidy of less than $75 per month? As I mentioned earlier, if the employee's monthly costs are less than $75 per month, then the subsidy would be limited to the cost of the employee's monthly cost. However, you do need to allow the subsidy to be at least $75 in order to comply with option 2, as long as the employee's costs are $75 or more. So if you want to offer a reduced subsidy, let's say $40 or $50 per month, you would not be able to comply strictly by means of option 2, but there would be a way that you could offer a reduced subsidy amount and package that and submit that as part of our alternative commuter benefit option, which is option 4 that we'll be talking about in just a moment. So that's additional detail about options 1 and 2, and please submit any questions that we didn't already cover about those options, and we'll get to those when we get to the questions in just a couple of minutes. And now I'm going to turn this back to my colleague Christine from MTC, and she'll tell you a little bit more about options 3 and 4, and then we'll open it up for the questions we've been receiving.
Thank you, Dave. Option 3 is employer-provided transit. The employer provides a free or low-cost shuttle, bus, or van pool service. This service could be from employer residential areas to their work site, or from transit stations to the work site. It can be a shared service with other nearby businesses, nearby employers. And we have included for option 3 a list of transportation providers on our website landing page, should you be interested in a service such as this under option 3. As this is the most costly of the 3 options, this option may be most appropriate for employers who already have a shuttle service in place and can register to comply with this program, selecting option 3. Certainly, though, employers who don't have the service may elect to start up a service as well, or they can choose another option for their employees. Option 4 is the alternative commuter benefit. The employer may propose an alternative commuter benefit that would be as effective in reducing single occupancy commute trips as one of the 3 options already mentioned. This can be a good option for employers who are not near transit service, have limited transit service in their area for their employees. This also provides flexibility and choices for employers to choose from a variety of measures that I'll cover in just a moment. And it promotes other alternative commute modes, such as carpooling, bicycling, and walking. The alternative must be as effective as one of options 1 through 3. And an employer can do one of 3 things. They can select from a menu of measures, which will be covered in just a moment, which is for options 4A or 4B. Or an employer can choose an alternative benefit, which is option 4C. For option 4C, the Air District must evaluate the proposed alternative benefits to determine that it would be as effective as options 1, 2, or 3 in reducing the single occupant vehicle trips to the work site. During the registration process, an employer selecting option 4C must describe its proposed benefit and explain why the proposed alternative benefit would be appropriate and effective at its work sites. The Air District must evaluate and approve any alternative commuter benefits proposed by the employer. Option 4A and 4B provides an employer a means to promote the use of alternative commute modes that are not directly addressed in options 1 through 3, such as carpooling, walking, telecommuting, compressed work week schedules, or promoting the use of electric vehicles by employees, for example. To help employers develop alternative benefits for purposes of option 4, the Air District and MTC have defined a menu of possible measures that employers can choose from to submit a pre-approved alternative. The measures are categorized as primary measures and secondary measures. And you will see from the slide that for option 4A, an employer would choose one primary measure from the list included on the slide, such as a carpool subsidy, and 2 secondary measures, such as an emergency ride-home program and preferred parking for carpools, for example. Or an employer may choose option 4B, and in that case, they would choose 4 secondary measures from that list of secondary measures. It could be on-site bicycle parking, lockers for bicycles, employer-sponsored bike share program, and perhaps maybe a commuting awards program, for example. So looking at options 3 and 4, as we've done with the previous options, we wanted to provide you with one of the frequently asked questions that have been asked quite a bit related to option 3. And as you can see here, if a work site is served by a free bus or shuttle, does that qualify for complying via option 3, excuse me. So as mentioned here, in order to qualify for compliance via option 3, the employer must be helping to fund the bus or shuttle service. And an example we give here is if an employer contributes to a transportation management association or a business improvement district which operates a shuttle that serves its work site, that would qualify. Finally, we did want to give you an opportunity at this point, as we're concluding this presentation, to submit any questions you have regarding option 3 or option 4, or anything else that has not been covered during this presentation that you may have questions about. This would be a good time to submit your questions. And we would like to add that if you need any additional information about the Bay Area Commuter Benefits Program, please go to 511.org and click on Bay Area Commuter Benefits Program. You will also see contact information here as well for the helpline specialist to assist you. At this point, I will turn this back over to my colleague, Tom, from the Air District.
Thanks, Christine. Thanks, Dave. We've been gathering questions from everyone who's viewing, and we've gotten a lot so far. We're going to dive into these questions, and we've listed a few here. The first one, how can I get our company ID in order to register by the deadline?
Yes, in order to receive your company ID, we have a helpline specialist from the 511 Regional Rideshare Program. And the easiest way to reach her would be at this last slide we have off the contact information listed there for the helpline specialist, and she will walk you through the process to obtain your employer ID.
Thanks, Christine. Next question. Regarding full-time employees, how long must they work for 30 hours per week to be counted? Is it 1 week, 1 month, 3 months, etc.?
So for purposes of determining the employee count, the way we set this up, we're asking employers to determine that employee count by calculating the average number of employees per week over the course of the most recent 3-month period. So in this particular situation, I'd say you would look at that employee and see whether they normally worked more than 30 hours a week during that 3-month period, and if so, they should be included for purposes of making the determination.
Great, thanks, Dave. Let's move on to the next question. In the notice to employees regarding option 1, which date should we give? The date for the enrollment, the date for the first deduction, or the date that will issue the voucher to employees?
I think that you need to include the date that people need to enroll by, and then the date that they will start receiving the actual benefit. So they need to know both things. When they have to get their enrollment forms into management, and then when they will actually start benefiting from that.
Thank you, Linda. Our next question. Our full-time employees currently need to work 60 days before they receive benefits. Does this new ordinance mean that we need to now offer them these benefits to new employees starting day one?
So our hope is that employers will make benefits available to employees as soon as possible once they come onto your payroll, because then the employee can begin to enjoy the tax savings and the employer as well. However, we recognize that employers oftentimes do have a waiting period before employees become eligible for benefits. For our purposes, we say it's reasonable to have a waiting period, but for purposes of the commuter benefit program, the waiting period should not exceed 90 days from the time that the employer comes onto your payroll.
Thanks, Dave. Next question. What is the maximum number of days between making the deduction and giving employees the voucher?
Typically, employees will take out the money tax-free the month prior, and then they will receive the funds at the end of the month to be able to purchase their transit pass. Transit passes usually go on sale just a few days before the beginning of the next month. So making sure that they have it before the end of the month would be useful so that they can have their pass ready to go on the 1st.
Thank you, Linda. Next question. If an employee is issued a company car, are they classified as exempt from the 50 employee count?
So we talked earlier about the field employee definition. If the employee has a company car and they typically bring that car home at night and then go out and use it in the field during the day, that sounds like it would count as a field employee, and that employee could be excluded from the count. If the employee has a company car but they're simply using it to come to the same work site every day, then they're not a field employee, and they should still be included in the employee count.
Thanks, Dave. Next question. Regarding temporary employees working less than 120 days per year, do you mean they're only exempt in terms of determining whether you have enough full-time employees to be subject to the program?
If an employee meets the definition of a seasonal or temporary employee, meaning that they're working 120 days per year or less, then they don't need to be counted for purposes of determining whether the employer has 50 or more full-time employees. They can be exempted for that purpose, and they're also exempt from receiving commuter benefits. So they don't count for any purpose. That said, an employer certainly has the flexibility to provide a commuter benefit to temporary employees if they see fit to do so, but they are not required to do so for purposes of our program.
Thanks, Dave. We're getting a lot of questions here. We're moving through as quick as we can. Next question. If we have less than 50 employees, can we still voluntarily participate?
Yes, we encourage employers who have less than 50 employees to consider offering a commuter benefit for their employees so that they are not driving back and forth to work.
Thanks, Christine. Another question about field employees. Please confirm the definition of a field employee. In our case, we're a senior staffing agency, and our caregivers do not report to a permanent work site. Can we consider them field employees?
Based on the information provided there, the answer would be yes. Those would qualify as field employees, and they could be excluded for purposes of our program.
Thanks, Dave. Next question. Do you have materials that we can use in our communications to employees regarding the program?
Yes, on the website landing page, in the center of the page on the right-hand side, we have a number of green tabs providing employer outreach materials and assistance. And the last tab on there is titled For Your Employees, and there you will find a poster and some other informational materials that you can utilize to promote your new commuter benefit option to your employees.
Thanks, Christine. Next question. For option 1, should we provide cash or a Clipper card?
For option 1, the federal government clearly states that if there is fair media available, like Clipper cards, like voucher programs, such as Commuter Check, TransBand Check, that you should utilize those programs as opposed to cash reimbursement, because they know that the money can only go towards transit, that someone can't say they're taking transit and use that money. If you choose to do cash reimbursement, I advise you to keep a paper trail, because at any given point in time, the federal government could decide to audit you based on the fact that you are doing cash reimbursement. So you want to keep copies of receipts. If an employee actually has a transit pass, which they may or may not, because a lot of the transit agencies are just going to Clipper Card for their monthly passes. But certainly keeping a copy of any receipt showing that they purchased transit is important.
So it sounds like more we might encourage people to use a transit pass over that cash method.
Yes, using Clipper or a voucher program.
Excellent. Thank you, Linda. Next question. Can you please explain a covered employee one more time? Do employees working less than 20 hours per week need to be offered a benefit? Conversely, can part-time employees take advantage of the benefit?
So if you're subject to the program by virtue of having 50 or more full-time people, which we're defining as 30 or more hours a week, then you're supposed to offer your commuter benefit to any covered employee, and we define covered employee as employees who are working 20 or more hours per week. So if an employee works less than 20 hours per week, let's say 15 or 18 hours, then you are not required to provide a commuter benefit to those employees. That said, it's certainly the employer's option to make the commuter benefit available to all employees, even if they're working less than 20 hours a week, but that would be at the discretion of the employer.
Thanks, Dave. Next question. What guidance is available for option 4?
On the website landing page, and mentioned a little earlier in the presentation, we've developed a detailed option 4 guide. So if you go to the website landing page and scroll down to the bottom of the page, there is a green box in the right-hand bottom corner of the page, and you'll see there's a description of option 4, and then next to that description there is a text indicating click here for the option 4 guide. The guide itself will provide you with all the detailed information you would need to determine which primary measures or secondary measures, or potentially the use of the option 4C option would be best for you.
Also, I wanted to say you can contact your representative at 511, at the Peninsula Congestion Relief Alliance, Salado Napa Commuter Program, or Contra Costa 511. We can help you determine, based on where your work site is located, what options might make the most sense for you.
Thanks, Christine, and thanks, Linda. Next question. Is the subsidy for option 2 taxable?
For option 2, if you provide the subsidy to the employee, it is non-taxable for the employee. As an employer, you would treat it as any other business operating expense.
Thank you.
but the employer, as long as it's less than that $130 per month cap, it's not taxable to either the employee and the employer does not pay taxes on that subsidy either.
So up to $130 a month, right?
That's correct.
Great, thanks. Next question. Are employees required to sign a waiver if they're not participating?
No. The participation in the program is entirely voluntary. There's no requirement to sign a waiver. No employee is required to take advantage of the commuter benefit or to change their commute mode. It's strictly about offering employees a variety of benefits and hoping that they will see the value of using those commuter benefits.
Thanks, Dave. Next question. Which box on the W-2 form do we check for the pre-tax deduction?
Actually, that's one recently that I had come up, and actually I am not a tax professional. A tax professional can help you with that. I do have a guideline sheet that can be emailed to people from the state of California that may be helpful, but I recommend consulting with your tax professional to make sure the program is set up correctly.
Excellent. All right. So check with your tax professional. Next question. Regarding registration, do we need to enter every work site, or can we just enter just a few work sites?
If an employer has 20 or more work sites, they do have there is the option of providing a detailed spreadsheet to the regional rideshare program. And at the same time, during the registration process, the employer then can register their total amount of full-time employees and covered employees over the course of all of their work sites. But we would also ask for a detailed spreadsheet of the various work sites. If an employer has less than 20 work sites, we would ask that you complete the information for each work site. And I might mention, too, that the registration process is set up in a way that if an employer does provide the same commuter benefit option at each worksite location, this becomes much easier for an employer as they can indicate this and they will not have to continually add that information into the registration process.
Thank you, Christine. Next question. Can you please talk a little more about what you do with employee density mapping?
With employee density mapping, we can show where employees live. We can help the employer by looking at that map determine what transit options are available for them along those the routes that employees would take based on where they live. We can help them form band pools when we see large numbers of employees coming from certain areas. It also is helpful for forming carpools to work sites.
Very helpful. Thank you, Linda. Next question. If your company already offers commuter benefits, do we still have to register?
Yes, we would like you to register as any employer that has 50 or more employees in the boundaries of the Air District in the San Francisco Bay Area is required to register. The registration process for an employer who already has commuter benefits would just entail indicating what commuter benefit you are providing and also providing us with information as to when you actually put that commuter benefit in place as you complete the registration process.
Thank you, Christine. Next question. Why does the employer have to be responsible for issuing pre-tax deductions for option 1?
I'll take that one. Because that is the way the federal government set up the commuter tax benefits program. So it can only be provided to an individual through their employer. And it's simply an easy tracking mechanism for the IRS.
And it's similar to flexible savings account where the federal government allows the use of pre-tax dollars for certain purposes that are deemed of social value, but it's only going to be available if the employer facilitates that. To prevent abuse, employees are not allowed to do it strictly on their own.
Great, thank you. Let's move on to the next question. We have 2 companies in SSO. Do we still have to register?
So at San Francisco International Airport, there is a specific regulation there for employees, for employers who are tenants at the airport. We have worked directly with the San Francisco International Airport, and for any employer that has 50 or more full-time employees, they are required to register with our program. For any size employer less than 50 employees, they would be registering with the San Francisco airports due to their regulation.
All right, thank you. Next question. Option 1, can employers charge their employees the cost of purchasing the voucher?
That really does not come under option 1 if they're purchasing it. It's a little different. So I don't think they can actually charge them for that. What they're charging them for is the voucher. The employer should be paying the cost of the voucher. The voucher programs are very low cost. Commuter Check just has a small handling and shipping cost to it and a small percentage. TransBand typically just has a shipping cost. So it's relatively low cost for the employer to cover it.
So in most cases, the employer tax savings should fully offset any administration fees that they're encountering. For that reason, we don't really see that there's any need for an employer to charge an admin fee. It's also unclear to us how an employer would handle an admin fee for purposes of IRS purposes. So if you want to do that, it's probably going to be more trouble than it's worth.
Thanks. Next question. How is employer defined by federal ID number? And if we add new branches periodically, how can we update our registration?
So we will be asking employers to submit an annual registration update that you'll receive an email roughly on the anniversary date of your initial registration asking you to update any information. If you have new work sites that have come online in the intervening period, that would be the time when you would add those work sites to your registration form. But there's no need to revise that until we ask you for your annual registration update.
Just to be clear, also, they asked how the employer is defined, and they related it to their federal ID number. For the sake of the program, it's different, isn't it, Dave?
For purposes of registering with our program, we purchased a commercial database that was the best resource we could find, listing Bay Area employers that would potentially have more than 50 employees. And we use that list for purposes of assigning an employer ID number. We think there's a lot of overlap in terms of that list and the federal tax numbers. But if there's a specific issue with your work site and whether or not you have an employer ID, we would encourage you to talk to Michelle Ma at the 511 Employer Helpline, and she can address any specific situation and help clarify that for you.
Thanks, Dave. We're getting down to the wire here. We've got a few minutes left, but we're working hard to answer all of your questions. Next question, is there a minimum amount to be offered through option 1?
There's no minimum amount in our guidelines, nor in the IRS guidelines. So in theory, an employee could request to have as little as $10 a month or something set aside. But in reality, in the Bay Area, a monthly transit or van pool fare is normally going to run north of $50 a month, oftentimes more than $100. So it's pretty unlikely that any employee would be requesting a set aside that would be less than $50 a month.
Thanks, Dave. Next question, can pre-tax funds be used for bridge tolls?
No. That is not part of the federal program, and so they would not allow for that.
Right. Next, are we required to offer commuter benefits to employees outside of the Bay Area?
Our program applies strictly to employers and their employees that are located within the Bay Area. So our regulation does not have any effect beyond the 9-county Bay Area. We certainly would applaud employers who choose to make commuter benefits available throughout their operation, but there's no requirement that you do so.
Thanks, Dave. Next question. For option 2, can an employer reimburse up to $130 per month instead of giving a transit pass or a voucher?
For option 2, yes, they could do that. They would not want to give an employee more than the cost of their transit pass. Because if they did, then they would have to do it like through a voucher or something else. If they gave them cash, that would be against the federal guidelines for the program. But they can give the employee tax-free up to that $130. So it depends on what form of transit someone is riding, or if they're in a van pool, how much they actually need.
But again, they may encounter issues with the IRS if they try to provide the subsidy on a cash reimbursement basis.
Thank you. All right, and I think this will be our last question. For option 1, is the benefit use it or lose it, or can remaining funds be rolled over?
The funds can actually be rolled over to another month. You don't want someone to be building up money in that account, and you don't want them to sign up at the beginning of the program and then not use the money and then say they want it back a year later. However, if they sign up and say they are out on a medical leave or on vacation or traveling for business and they don't use it 1 month, that can roll over into the next month. The only thing is people need to make sure they don't take out more than the maximum they can use in a year. And if someone has signed up for the program and leaves, you know, at the end of the month they leave their job or whatever, and they have not received their money downloaded onto a Clipper card or a voucher or anything as yet, that money can be given to them as taxable income.
All right. Thank you so much to our panel, Christine, David, and Linda, for answering the questions. Also, Jackie here helping with the questions. And also, thank you to you for joining us for today's webinar. Unfortunately, our time is up. I want to thank our presenters, as I just did. We've all worked hard to answer as many of the questions as we could in the time that we had. We weren't able to get to all of your questions. However, we noticed many of the questions asked were answered in our previous question and answer session from the first webinar. And some of the questions were also in our list of frequently asked questions. You can find these questions and answers on the Commuter Benefits Program webpage. If you'd like to review today's webinar and today's presentation, a recording of the webinar and the slides from the presentation will be provided later this week on the Commuter Benefits Program webpage. There on the webpage, you will also be able to find many useful documents to help you register and comply with the Commuter Benefits Program. Visit the webpage today by going to 511.org and clicking on the Commuter Benefits webpage. If you need more assistance, call 511 or send an email to this address, commuterbenefits@511.org, just as you see here on your screen. Dave? I think that'll do it for us today, everyone. Thank you so much. Thank you for joining us today, and thank you for registering your company for the Bay Area Commuter Benefits Program by the deadline of September 30th, 2014. Thanks.